Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, 28th of May, the day after Memorial Day. I hope you had an amazing long weekend. And now be prepared because this week, on Thursday and Friday, we are getting a lot of economic data. On Thursday, we will have GDP and PCE prices quarter over quarter. And on Friday, we will have PCE and personal income for April. But until then, we just have to exercise patience. And today, it's one of those days in which, after a long weekend, the volume is quite lacking and the moves are not super strong, not super defined. So we have to be pretty disciplined to just trade our best setup or not trade at all if we don't have the proper setup. The economic data for today, it's basically housing market, housing sector, home price index month over month and year over year still pushing higher, and the house price index is still pushing 6.7% year over year. So I think this is a miss because the housing sector, it's basically one of those sectors that the Fed are watching pretty tight because they want to cool down those prices. Fed Kaskari went out and said the typical higher for longer, they want to see more data, they need to be patient. Kaskari does not have any vote on the FOMC, but it moves the market. But the big number today was consumer confidence for May. Look at this, from 97, market were expecting a little bit of cool down, but 102 was a pretty big tick in the right direction because consumer confidence is one of those metrics that basically boosts growth and boosts the economy. And I think markets want exactly that. They want growth, and we are seeing the market turning back up after a big push down into the overnight. Let's see the big picture here was, I told you on the Saturday weekly recap. If you didn't check that video, please go ahead because that's a pretty interesting video. We put these two zones, basically the inverse and the bullish, and we are just trading in the middle. We are trading in this zone in the middle. So the market is not deciding ahead of big news. It's just chopping around, trying to grab liquidity, and intraday moves are good moves, but for investors and big hedge funds and big investors, this is just another day and they will wait for big volatility and big news. That doesn't mean that we don't have today any moves. On the 15-minute chart, we have a pretty big move to the upside in the overnight, and look at this volatility. On the 1 minute, we just saw basically a push higher, consolidation, and a move lower just because, yes, it is what it is. Sometimes during the overnight, you just see this move without any kind of catalyst and without any kind of reason. That's why you always have to exercise patience and discipline to commit to your stop. I was watching the zone for shorts in between this zone, this red area in between the 30-minute and the 1 hour inverse fair value gap. I never had the opportunity to just take that zone because, I mean, look at the market. I'm not going to short up here with this kind of move. So we took liquidity from yesterday's lack of volume and we just do a reversal. And until the open, right at the open, we just sank. We sank, we flashed, and since then, we've been putting pretty nice grind day with all these buyers on this. This was an actual good setup, but I already took the decision at the open after seeing this move that I didn't want to trade today. So if you took this opportunity from this fair value gap, you had three opportunities to just take this with the stop down here and then taking, I think the first target would be the high of day. And since that high of day, we've been just chopping around. The dollar, it's in the red. It's basically just holding pretty bearish. We have a series of lower highs and lower lows. So this is a trend of the dollar that it's actually putting a lot of upside into equities, but the yields are actually pushing. The 2-year yield it's at 5%, and the 10-year yield is pushing again 4.5. So after the big drop 2 weeks ago, now we are at the same situation. So I mean, this is not good. And what is not good either, it's the inverted yield curve. Remember the 10-year minus the 2-year inversion. We are waiting for the recession signal of the 0% on this metric. But look at this. We were exactly at this zone and we moved lower. But again, we have to see the retest and then perhaps a move even lower. But this structure is not good. Yields are not good. Treasuries are feeling the pain. 1.20 in the red today. Russell small caps were quite in the green, but they were just pulling back. So what is happening today? I think today is a mixed bag of sentiment ahead of big news on Thursday and Friday. So if you were chopped out, I mean, it is what it is. Sometimes that happen. I hope you are managing your risk until the big news. But crude oil is spiking, 2.61%. Silver is also pushing. And the big copper, silver against the equities are still pushing. Look at this metric. The metals are still performing way, way better than the equities. And this is a rotation. This is something that is called rotational investment into this kind of assets that are defensive. So don't forget about that. Defensives are still pushing higher. Equities are trying, but they cannot push higher. And until a big catalyst happen, we are just shopping around. Today is one of those days in which I think it's not worth. So in my opinion, we are in the same situation as of Saturday. We are in between two big structures. We are trapped in between, and we are just trading the chop until one of those structures just wins over the price action. So until then, either we push the all-time highs or we reject the bullish structure and start our way towards 18,600, which I think is one of those key levels in which I would like to be buyers commit again. If not, we are going to see more price lower. So until then, I think we have to be patient today, tomorrow, and after tomorrow, and wait for Thursday and Friday. Trust me, those will be the days in which you have to put everything. You have to be disciplined, you have to be patient, you have to manage your risk and react to those numbers. And those days are the days in which you make money, not today. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. If you missed my weekly recap on Saturday, please check that out, because that's really, really awesome video. As always, be disciplined, be patient, manage your risk, because those are key for your success. Stay safe, everyone, and see you tomorrow.